Good morning, everyone. We've got Brian Caprice, and I am Dan Cook with Nadex. Today is Tuesday, April 12th. Already had CPI numbers come out, which is what really the market was looking for. We'll dig into that a bit more, but I don't think it really changed the outlook a ton. Before we begin, though, we've got quite a bit of market action to cover today. And if I can get my screen right, there we go. Just want to keep in mind, we've got volatile markets. We think we've seen that. Trading involves risk now as much as ever. There's a lot of themes going on. So always make sure you're managing that risk. Trade with only money you can afford to potentially lose. Nobody goes into trading with the idea that they're going to lose money, but it happens. It happens every day. Always manage your risk. Most important thing you can do. We're going to be talking about the markets, going to be looking at a lot of market action. This is for educational purposes only. So please do your homework. We're not giving buy or sell recommendations on this show, but here to help educate about the markets. And as you know, Brian does a great job with that. And that said, let's hop into it, Brian.
Yeah, so we've been waiting for the CPI number for a while. We mentioned it yesterday being an important one. It came in a little bit lower than expected. Overall CPI, with everything included, it did maintain the 1.2% increase, and that's really the number that we need to be watching out for. If we think about what's hurting us, it's, people aren't talking about, oh, my medical prescription, it went higher, right? Or my home value. God, my home value went up too much. It's the food cost and the energy cost is really what we're seeing. Taking the core, it strips those out. It's still a positive number. It's not like it's going down. But again, the 1.2% month over month CPI, still a pretty hefty figure. Now, everybody's seeing the red right now, and currently in the markets, what we're seeing is we're seeing the dollar weakening, coming in at 0.3% versus 0.5. That's not going to stop the Fed from rising interest rates. They're not going to say, well, hey, the CPI was weaker this month. Maybe we should do nothing. That's, again, the core is great, but the reality of it is the food and energy cost is the major problem. Interesting headline that came out of CNBC earlier this morning. Basically this one, a couple different of the large agencies. If you guys know what Moody's is, they're a rating agency. March's runaway energy prices and higher food costs could mean the hottest consumer inflation since 1981. Now, many traders out there don't remember what inflation was like in 1981. I was alive, but I was 5, so I don't remember what it was like. I know the stories.
You're so young.
The 80s had the best clothes, the music was so much different than everything else. But yeah, so I was born in 76. So I couldn't tell you what the inflation was like and what it felt like in 1981. But I do know that, hearing stories from my parents about what the mortgage rates were at that time, it's laughable. It's like, there's no way that it could get that high. But we're talking, rating agencies are talking about it. They mentioned that it's the perfect storm. And this is something I mentioned. We have Russian invasion, we're coming off of COVID recovery. We have surging oil prices. We have China locking down. And this is something I keep bringing up and we really haven't heard too much about. Again, so we knew that supply chain was the original kind of spark, one of the original sparks now. But China's locked down again. We're not talking about, okay, what does that mean in a month or 2 months from now when we can't get the goods that we typically buy from China? No one's talking about that. All we're talking about is, oh my God, we're going to raise interest rates to control inflation. But again, a lot of it does go back. You remember, they always have like a flavor of the month or the excuse of the month. Supply chain disruptions was a big deal. And I don't know if you guys have been to the store. As I said yesterday with the whole, like I couldn't even get the boys a birthday, cake because they don't have stuff to make the icing and something else. I was just blown away. I was like, what? You're Sam's Club. You don't have stuff. You can't get ingredients to make icing. And they've just started locking down more. So we haven't heard a whole lot about it. So it's kind of crazy. But again, we're still continuing to see it rise. Currency market, more or less flat. Obviously, you're seeing the dollar down a little bit based off of that, the data today. The yen is also kind of rallying back again. We talked about how, yesterday the yen was getting just hammered. It was, your dollar yen, pound yen were both, up like 170 to 200 pips. You're seeing that retrace today. It's kind of that overreaction and the rubber banding effect back down again. And we mentioned, look for those. That was a parabolic move. Look for the retracement lower. So that's kind of what the news has been. There has been some news in Russia. Actually, there was comments this morning that I guess Mariupol, if I'm saying it wrong, I do apologize. Now they believe that city's ready to fall. That it's completely surrounded. They're running out of ammunition, and it's only a matter of time before it completely falls. And that Russia is basically concentrating all its efforts on the east that connect Crimea to the Donbas region. and I guess Marpole is smack in the middle, I guess. So again, they are starting to gain some ground there. And that's kind of it for headlines. I mean, later today, we do have Bernard speaking. And again, is she important? Yeah, kind of. But she's speaking about the economy in an online event hosted by the Wall Street Journal. She speaks at 12 right at lunchtime. So is there anything that we don't know already? Probably not. She's supposed to be the number two, but she hasn't been very public or made any inflammatory speeches. But it doesn't mean that she couldn't say something that's crazy. But remember, she is kind of the crypto queen. She's the one, the most vocal. Where Bullard is the most vocal about raising interest rates and controlling the economy. She's the most vocal about cryptos. So again, will she mention something about that? Probably. I would assume so. And again, I think she's a great person to kind of champion that. And then New Zealand is raising interest rates tonight. So that's kind of the news front. VIX is obviously way down. Everybody was kind of concerned about that one. We had the big gap yesterday, obviously, with Russia, but it's still moving up. Now we're seeing it pull back down. And again, with the big pullback, everything should be in the green, as it should. I mean, in reality, yeah, it's getting one gauge of inflation that's maybe it's not as bad as everybody thinks it is, even though it actually is. It's always nice and it's kind of taken some of the heat off. The dollar's initial response was straight down, but the reality of it is the Fed going to look at that and say, oh, it only came in as a 0.3, not a 0.5? You know what? Maybe we won't raise interest rates this time. It would be crucified like instantaneously because it's, we're still at 40-year highs and, nothing is looking great as far as the inflation front goes. So anyway, indices are taking an interesting pop. Okay. So as we talk about on this channel, we talked about it yesterday with the yen. Parabolic moves are a great setup. It's an emotional response to something they see, pretty much news, that sends it kind of kind of an out of, not an ordinary move, right? And again, if I'm mixing my words, guys, allergies are still kicking my butt. I feel better than yesterday, but it's still kicking my butt here. I hate spring. But again, we are pulling back. And right now, if you look from the highs, the lows, we are right around that 50% mark. It's interesting because, again, are we looking to short now? No, but is there probably a short opportunity here? Most likely, because there's this emotional response that we saw and again, this is what we would consider the futures market, right? Stock traders have not had the ability to react to this yet, okay? They will be profit taking, people trying to kind of trap them. What will happen is a retail trader will see this big surge forward and say, hey, I need to get in, that the CPI was low, I need to buy it. But what you're doing is when you're buying, you're helping everybody over here that bought it to get out. Now, does it mean it can't go higher? No. I mean, they could swing this as like, oh, look, we told you inflation was as bad, but the reality is it's not as bad as what the forecast was, but it's still not great. It's kind of like, oh, listen, my house was on fire. It's only the living room now, guys. It's just the living room, so it's all good.
Yeah, the narrative hasn't changed at all in this whole story.
No, it's not. So I would say it's temporary retrieve, but I would still look for it. Look for again 50% right here. We're seeing some sellers. You can see at the 61.8, we also have an area of basing, and just above that, there's these two small areas here that I think could all be potential reversals after the open today. Does it deserve to be a red day? Not really, but I would expect, and whether it's today, maybe it's even tomorrow, I would expect some type of basing somewhere in this area and then a pull back down again. And typically, again, you're going back to the origin of the move, which would be right at this level. Okay. And that would be at 44.20 in the ES. NQ also pulling up and kind of the same thing, going high to low, right? Yesterday, actually, we talked about that Harry Potter trade. We said, hey, listen, we're finally getting the base below this 14,184 if we get a pullback. That pullback came in at 10 o'clock in the morning and then continued to drop down again. So again, we talked about that zone, and again, here's the completion of it. It had some issues with this level and then ended up going a bit lower. So if you were following, you do understand the Harry Potter trade, which we talk about here. Again, there's another completion of a Harry Potter trade. Let's remove that. Get that off. That one, I can leave that there for I guess. So kind of the same scenario here. Again, high to low. This was kind of a sideways kind of movement. I wouldn't say there was a trend either way. So using the high to low, you can see same thing, a parabolic move, something out of the ordinary. I mean, again, this is 2 days back, and it's the largest candle on here. Again, typically see reversals from these things, but we have the 50 right there that we're seeing. And again, it's an area that it's not as good as the ES, but it was pushed, it did turn. There is a gap, though, actually sitting up here at the 61.8. So the 61.8 may be the magic number on this one to take it short. Kind of the same thing. You typically want to run it back down, and this one would be 14,060. YM also moving up. YM is actually past the 50, and again, it went through it. It was in closer proximity of it. It's getting up to that 34,500. I keep talking about that number. we're getting there again. And again, there's definitely some basing sitting in there. So it's kind of the same scenario, as well as we know we have one a little bit higher. YM in general is technically right now the weakest. It is up 0.7, where everything else is up, 1%, 2%. So if things do turn, YM should technically be the first one to turn and the one that returns back to the origin of the move first. And again, a couple ways to play these. When we talk about oil, I'll mention one of them. And then again, Russell, there's great news for the Russell. Inflation's not bad. It's not hurting the little guy. Awesome. And I didn't actually get the draw on this one because this one's been a little bit more whippy. You know, basing levels, but a lot of the fib areas in here, I don't like them as much. But I would say kind of the same thing. Right now, if we took this and we said, hey, listen, if this is the low and this is where the high is going to be, you're starting to see where that 50% is coming in at, and really kind of helps us draw a target on this one. For where it should be, but kind of the same, in the same, kind of arena. 1985 is kind of where I would see that. Now, all this is great that, again, the VIX is down, all the indices are up, inflation is not bad. The areas that were hurt most is one is oil. Okay. Let me go back up to 30. Oil yesterday morning, we were sitting down here and we were talking about, hey, listen, 93 is the level. It kind of spiked a little bit in the morning hours, but this could be the bottom of oil for the week. There's really nothing justifying this low. And we talked about the US trader coming online and oil raising. I mentioned, again, week-long positions. There was different ways to play it, knockouts in particular. Mentioned that I'd be looking to get long this week. Why? Because the situation in Ukraine is not solved. If the economy is not doing as bad, inflation is not as bad, that means there's more demand out there. We're all factors to go higher. From where we were yesterday, we are about, $5 higher. So has been great opportunity. And as far as knockouts go, a couple different knockouts got broken up. And Dan, I'll let you kind of handle that one. That's your
yeah, so we can pretty much blame oil volatility on the move we made here in February. People were talking about Ukraine, but really it was the Nadex adjustment on the width, where we had oil moving about $1, and we had really the knockouts were too wide. Now, because it does change the value of the contract, we can't just change them back without doing regulatory steps, approvals, and filings. However, yeah, the timing was just we changed them based on feedback from our traders. We do value that. However, 2 weeks later, we did have the Ukraine invasion, and so oil, the knockouts are a little tight on oil. There's still a great opportunity, but they are going to knock out at a pretty rapid pace when we see the moves like we've seen here in the last month and a half.
So I just want to let you guys know, it was not me, it was Dan. But they do take your, your recommendations and suggestions. That's the important piece to take from this. So yes, we have blown a lot of knockouts out. But the good thing is, and again, this is one of the differences, and I do like to talk about it. Again, call spreads are nice, just in general, not in regards to oil, but call spreads are nice because, again, they don't have that stop out feature, right? But what happens is when price moves too much, they don't continue to follow because they have the original print and they stay there. We're knockouts, yes, even though 4 of them or 6 of them have been broken out now to the top side, because they keep reprinting. There's been a lot of opportunities to get back into this trade. And again, initial surge, pullback. So we had opportunity to get in. Initial surge, pullback, opportunity. Initial surge, opportunity. Every time this pulls back, it gives you opportunity inside of those knockouts to be able to get nice positions. So, I would say right now with it back up at 97, it's probably getting a little bit closer to kind of the rich side there. Again, do I think it's coming all the way back down to 92, 93? Probably not, but as you can see, as I adjusted the fibs across, you can see what we're running into right now is an area where, again, 50% retracement, area sellers, sellers, sellers. It has hit 4, so it's not the ideal short, but it is an opportunity where we're coming right into this time frame. It is the U.S. coming online. Inflation's not as bad. Could we see a reversal down? Yeah, probably some profit taking in. But remember, tomorrow is the inventory report. We have API tonight. After the market closes, and then we have oil inventory tomorrow morning. Now, going on, everything looks like it's great. Natural gas is still continuing to grind. And again, yesterday, I mentioned, although we were in an area of sellers, I said, hey, listen, it's kind of the perfect opportunity. This is the 9 o'clock candle, 9:30 candle. I said, we're like basing right above a zone that, had been, we expected it to break. This is a stereotypical Harry Potter setup. I put the lightning bolt there because we had the basing, the pullback, and this would actually give us a little bit of a double kind of a double entry opportunity, and then continue to take off. Now, I don't like natural gas up at 680, but it's one of those things that, again, I think on a fundamental basis, it's really hard to get short this one right now. It's really about finding opportunity. It is starting to pull back now, and again, kind of expected with the news that inflation's not as bad. And, again, this one does whips all back and forth again. But I think overall, as I mentioned before, I'm 95% technical, 5% fundamental. I think it's very, very difficult. And the one thing about the markets I don't like, I absolutely love news trading. It's my favorite thing to do. The one thing I don't like doing is geopolitical. Terrorism, war, that kind of stuff makes it very, very difficult because at any moment you could shoot a tank could happen, somebody could get assassinated. It just those are things that are so unpredictable, and there's no way for the market to even figure them out. I like trusting the market's manipulation. I think I'm totally cool with that. But sometimes you just can't plan things. And natural gas is that arena right now. Gold is actually up right now as well. Again, why is gold up? Oh, it's only 0.3. It's not as bad. And again, headlines like this that we're going to have runaway inflation. People see this and it's like, yeah, I need to probably get back in gold because they're not doing a whole. They were so weak and they knew all this data and they did nothing. Yeah, it's probably a good time for gold. But I would say gold and silver are both in areas now where I'd be looking for. Hey, listen, if we get a top effect in here, again, that's a parabolic type move. We should be looking for reversals in gold and silver. So both great opportunities. Cryptos too. Again, for those of you that are crypto traders, I know some of you guys watch out there. Bitcoin is hovering and it's pretty close. It's within close proximity to that 40,000, which is always an important number. With Bernard speaking today, again, talking about opportunity. Again, she's the crypto queen. She's the one that's been mentioning it. She is, if they had to pick one person there that's going to be the czar of crypto, it's her. Okay. So she is speaking today at noon. Be very cautious about what's going on there. And you can see there's no real whipsaw in Bitcoin versus where the dollar, you're having this kind of whipsaw effect. So again, they are considered two separate assets now. One is not a replacement for the other one. But again, they're up big, 2.7, 3.0, and even Dogecoin is up 7% today. So again, you're not really seeing that. Bonds are also up a little bit. So it's odd that you have bonds up and the indices up. It's one of those things that it hasn't quite caught up yet. So, but I think there'll be some good trading opportunity today. I do think drop it down onto a 15 and really start kind of dialing into these indices and kind of seeing like, is this the peak coming in? Is this the peak, the pullback coming in? You're starting to see the same pattern on all of them, but they're starting to kind of turn a little bit, right? And even this one, Russell's even started to print a little bit of a red candle there. So it's interesting. Don't forget today at 12 though, we'll do a full breakdown. I'm going to basically not talk for 3 hours and then come back at noon and we'll do a full breakdown and kind of see how we set up oil for tomorrow morning.
Appreciate it, Brian. In honor of 1980s style inflation, perhaps for tomorrow's show, I'll break out my Miami Vice gear if I can dig that up somewhere.
That would be awesome.
Appreciate it. We've got a lot of great moves. I'm going to skip the parachute pants comment, though. A lot of people, I'm sure, listening don't even remember parachute pants, which is probably a beneficial thing.
I do. I remember those. I remember jelly bracelets and parachute pants.
Oh, absolutely.
Hairspray. Lots of hairspray.
Lots of hairspray. I'm surprised we still have an ozone layer, actually. But hey, thank you very much, Brian. Great show today. Want to remind everybody, trading does involve risk. We've got a lot of market activity. This was for educational purposes only. Got to be responsible for your own trading decisions. And always up. And Alton apparently also remembers the parachute pants. Vivid memories. Hope everybody has a great day. As Brian mentioned, we've got another session coming up here in a few hours. With that, hope you all have a great day. And remember, continue to manage your risk.